recap for 2025, right? And I also will be sharing some of my perspective regarding the 2026 outlook. Okay, so before I start, this is just a disclaimer. I'm not a professional financial advisor nor an accredited investor. The following information that I'm going to share is based on my experience and based on what I know. I must highlight that investing is risky and due diligence is required. And please treat this sharing as a form of education or entertainment. And this presentation must never be treated as professional advice. Okay, and just an additional note that this deck of slides, the content are mainly generated by Google Gemini. Okay, so with the disclaimer out of the way, I will now start with the 2025 market recap. Okay, so this is the year-to-date chart or the one-year chart from January 2025 to December 2025. So this is the S&P 500, okay, which is representing the best 500 companies in the US. And you can see that in general, the final year returns, we are looking at about 19% over here. Okay, so basically it's a positive return. And what you can see in the QQQ, which is the NASDAQ or the technology index, right? Also it looks positive as you can see from the chart, returning about 24% last year. Okay, and I guess the next chart, you can also see our very own Straits Times index. It returned actually quite incredible returns. What you can see over here at the end of last year is a return of about 27%. So basically what we can also conclude from these three charts is that in fact STI outperformed the other US peers like the S&P 500 and also the NASDAQ 100 or QQQ. Okay, but what you can see in general for this chart pattern is that there is this sudden dip during the April period last year, right? So this is the QQ, previously was the S&P 500, and similarly for STI. So you all remember what happened during the April month? It starts with the letter L by Trump. So this is the Liberation Day, if you all remember, where he introduced to the world he re-educated the world about tariffs, right? So that actually sparked a sell down in the month of April, right? But you can see it's almost like a V-shaped recovery again, right? So somewhat in these recent past years, we are looking at really a sharp V-shaped recovery whenever there is a drawdown or a meltdown in the markets. So you can see that the markets are quite resilient and it's very bullish as you can see from the three charts over here. Okay, so in general, the technical indicators look okay in terms of the charts for major indexes. Basically, other indexes around the world in the various continents in Europe and South America, they look positive as well. Okay, so I will just summarize some thematic I also will provide some thematic analysis about the 2025 as part of the market recap. So like what I've mentioned in the previous charts, right? April was the month dominated by the Liberation Day announcement by the US administration, or particularly Trump over here, and his famous phone board of all the different tariffs to be imposed imposed to the various countries around the world. Okay, but as you can see in the second half, particularly or even by the second quarter, they actually recovered quite sharply, and it ended very positively at the end of the year last year. This is also something that we also need to take note of, and I will also touch about would be the Federal Reserve interest cuts. Okay, and another strong theme that happened or occurred last year would definitely be AI, right? So artificial intelligence was really a very, very visible theme. And of course, the effects are having some spillover to this year as well. So, if you all remember, in January last year, there was the introduction of a DeepSeek from our Chinese counterparts. And why it was a shock is because there are all the sanctions and then all the restrictions of selling high processing GPUs to China. And that actually limited or in fact hampered the progress of their AI development. But eventually it did not have the effect that we wanted. And what it did in terms of the DeepSeek company actually released this quite capable and effective Chinese AI model, right? Which also gave ChatGPT a run for its money, or also definitely a shock to them, right? Because as in the ChatGPT or OpenAI, they were able to access the very high processing GPUs from NVIDIA. So with the restrictions and being able to create something on par with ChatGPT was something that really wowed the entire world. Okay, so that actually spells how ambitious the Chinese can be in terms of developing and progressing AI in this aspect. Okay, and if you're know or you are familiar with the Magnificent Seven or Mag 7, right? Last year wasn't the best for them. Okay, later I'll explain more based on the chart below. But overall, the AI race is very intense. And I think different companies really are trying different means and ways to get their hands in all these GPU and processing chips, and really trying to outdo each other. Okay. So for Magnificent Seven, in terms of the returns, as you can see below, right? Anything after Tesla, like Microsoft, Meta, Apple, and Amazon, the returns as compared to their Nasdaq index or even the S&P 500, it paled in comparison. Okay, so Tesla onwards, like Nvidia as well as Alphabet or Google, they actually showed better returns as compared to S&P 500 and Nasdaq. Okay, so we all know that in terms of the overall returns, the general trend or the pattern that we see is that the Magnificent Seven, in fact, has the highest weightage in generating the positive returns for S&P as well as the Nasdaq. But what we also can see is that there are a lot of competition, which also results in the impact on returns. But what I would say is that generally all of them are having positive earnings. And just remember that in general, most of the companies in the US actually beat their earning estimates, right? So I mean, a company such as like what is mentioned over here, Broadcom or even Palantir, saw really X number of gains in their stocks as well. Okay. And yeah, sector winners would include communication services and technology, of course, because they really rely on AI to raise productivity and also help to drive earnings. Okay. I just want to bring attention, to the right box over here, the gray or black box. So I mean, if you all want to know why I started to this presentation by saying that most of the content over here is generated by Gemini, is because after 1 year, it seems that the Google AI model is really surpassing the rest. So OpenAI is ChatGPT. XAI is in fact Grok, and Anthropic is the Claude, right? So the major AI models are listed over here, and in terms of the performance, what we can see is that Google Gemini is really surpassing the other three at all fronts, right? So basically, in terms of the product, Google's Gemini is likely to be superior lah, in that sense. Okay, all right. I'll move on to the next point. Yes, if you'll notice for last year, the metals or precious metals did extremely well, right? I mean those who are staying near malls and you have those what Money Max pawn shops, right? They always show all the gold prices per gram. And I mean for me, I do visit them. I mean I don't visit them, but I walk past them many times when I visit the malls, and I can just see the gold prices just really rocketing to the moon. But it's just visible when you see at the malls, but when you look at the actual technical charts, as you can see on this slide, it's very, very clear. So what I'm showing here is that, the arrow here states the start of 2025, right? So basically, it's like gold prices, we are looking at about 80% increase, right? From the baseline of about 2008 over here, right? So now we are looking at about 4006, okay? And what we are also looking at is on the right side is silver. So apparently silver has done extremely well, or even better than gold. So at the start of 2025, we are even looking at about $30, and now it's about $88, right? So wow, it's a lot of X, 2 to 3x, right? That we are looking at for silver. So really one of the main themes in 2025 is the return of the precious metals. And we see gold and silver really outperforming the major stock indexes. Okay, so this would be the main thing looking at the markets, but I also just want to draw your attention to the dollar as well. Because if you all realize in terms of our Singapore dollar to US dollar, we can see it's getting cheaper lah, right? So Singapore dollar is getting stronger, and we can see the weakening of the US dollar dipping beyond sub 1.28 at one point last year during July period, right? So what we can see that because of the cut in interest rates, I think that explains the weakening of the US dollar, where the US dollar is now running across different countries where there are better yield returns. That is why there is this weakening of the US dollar. And what I have also shown here through the Gemini search in this summary table is that there are some positives, right? But some negatives as well, as listed over here. Because I mean, for us as investors, while it is good in a sense that you can buy cheaper US stocks, but those who had previously have investments in US stocks really will see forex losses in that sense, because I remember when I started after, I'm not saying after COVID, but during the COVID years, right? The US dollar was about 140, right? So in fact currently I would say that I have experienced forex losses in that sense, but I think in terms of the absolute returns, it is definitely more than the forex losses that I have for now. So I think the key thing here is to be invested in the market, and then not trying to time the market, because time in market is better than timing the market. right? So I think that is from the macro level, but what about the individual level? So what I just want to share with you is also there is a spillover effect when the US dollar is weakened because the Singapore dollar is pegged to US dollar, right? And the best performing currency in at least Southeast Asia is in fact the Malaysian ringgit, right? And with that in mind, the Malaysian ringgit has strengthened against the Singapore dollar. Okay, so if you all remember the good times are when it was 3.5 plus, right? And now it has dropped to about 3.14. Okay, 3.14. So that is quite significant. And although it's just a couple of percentage loss, you can see the reports at the bottom, right? The stronger ringgit keeps Singaporeans away from JB. So I don't know how many of you had recent trips to JB, but do let us know if you see lesser Singaporeans around. Okay. Yeah, but it's true that Malaysian ringgit is the best performing currency, and there is a weakening of the Singapore dollar to Malaysian ringgit lah. That means it will cost more when we cross the causeway. Okay. All right, so that would be the main themes I feel for 2025. Okay, and now I will move on to the 2026 market outlook. All right, I would just provide some balanced viewpoints lah, from the positive and the negative. So I will start from the positive first. So looking at the charts, which I've shown at the start of my presentation, right? That was the general trend, which is definitely an uptrend, right? And I think mainly the indexes like the S&P 500 and Nasdaq, they return quite positively at about more than 15%. Right, or nearly 20%, and the STI index returned about 25%. So it's very strong, right? Can you imagine every year we are compounding by 25%? So that one is incredible, right? But I mean, of course, it wouldn't really happen in reality. But so that actually spells that the momentum is continuing towards the 2026 year as well. Okay. So looking at the current economic indicators as listed over here, CPI is stabilizing. So if it's stabilizing, means there is no panic, and we wouldn't have any fear of inflation, right? Because if there's inflation, what the Federal Reserve will do is to raise interest rate back again, right? But what we can see now, I think the Fed is a bit dovish, so they will not really want to increase or hike the interest rate in the near term, because the CPI is stabilizing. So keep it well. And for unemployment rate is cooling down, even though there is an increase, but I think this is a digestible kind of increase in the unemployment rate, which means that the employment situation is not red hot, which will help drive inflation as well. Okay, so I think that is where the Federal Reserve, in terms of the independency from the political bosses, right? That they remain independent as an institution, because the key mandate of the Federal Reserve is to ensure that the inflation is controlled, as well as a good employment situation for the US economy. Okay. So, non-farm payroll, that means the real jobs in the services, or the rest of the key sectors actually is low, but that also helps support the cooling status of the unemployment rate. GDP growth is at about 2%, which is okay for a very mature economy. And in terms of consumer sentiment, it's mixed. Good and bad. But I personally was in US in December. I thought the overall consumption, or what I can see in terms of the retail, is still quite strong. right, in the US as well. So I think they are all currently in good state. For companies, the earnings health looks great as well. So what you can see in terms of the earnings per share growth for S&P is at 8.3%, which is definitely good. Nasdaq at 15, right? And profit margins in general stands at 13%, okay, and is record high. And also in terms of revenue growth, it's about 7 to 8%, which is also considered solid. And do you all notice the three charts which I've shared with you all earlier? What do you see at the end of 2025? I mean, there's only one phrase to describe, right? It's called all-time high, right? All-time high, which is ATH. So they are all at for the three indexes, they are all-time high. So in terms of valuations of the companies, I think in general they are quite expensive for now. Okay, I'll address this issue later in my presentation. Okay. So, like what I've mentioned also, the US economy, when we look at the indicators, they are all looking very strong. And you must know that, like what I've also spoke about earlier, is that looking at the S&P earnings, there are more companies that beat the estimates. That means what the analysts would look at in terms of their projected earnings, they actually beat them in their earnings reports. Okay. So what we are looking at, 64% of the S&P 500 companies actually beat the estimates, and only about 10 actually missed, right? So the in-between would be approximately based on the analyst estimates, right? And one of the explanation over here is that AI probably is one of the main factors that boost productivity and also drive earnings for companies, as what I can also derive from these indicators. Okay, so for 2026, just take note that currently what I'm seeing, or in general, the view of many, US economy remains strong and is also supported by the earnings of the companies. Okay, Fed rate cuts happened in December. Okay, and Trump also implemented or had this announcement of the big beautiful bill, which spells future or ongoing deregulation currently. And what we also want to take note of is that even though the federal rate cuts happen in December, the rate cut effect will only spill over during at least as quickly as Q1 this year, right? So we should have a lagged effect. I mean, this is good, okay? Lagged effect of the rate cut is good because once the rate cut is down, means people can loan money easily, right? So that is where we can see there will be more spending that can happen in subsequent quarters, right? And at the same time, we also know that as the Federal Reserve is becoming dovish, that also spells the end of quantitative tightening, right? So with quantitative tightening means the Federal Reserve will start printing money, and that will actually increase the money supply into the markets. Okay. And the second point here is that the Federal Reserve Chairman Jerome Powell is going to step down in May 2026, right? So it's likely that Trump will bring in his more favorable candidate to assume the role as the federal chairman. Okay, so with that in mind, we will possibly see further rate cuts, from the Federal Reserve, and therefore bring in more money into the markets. Okay, and based on the Big Beautiful Bill, one of the or two of the key outcomes will be there will be tax cuts for corporates and also better reliefs or credits for household and individuals, right? If I'm not wrong, there was one benefit for household is that for every household you'll be given $1,000, right? That will also improve disposable income and access to credit as well. Will also help increase spending. So these are the possible, things or positives that we can look out for 2026. And what I want to share is technically from the chart itself, it's still on the bullish uptrend. So what is being shown here on this particular slide is in fact the S&P 500. Okay, how you read this chart is that if you ever see this dip, okay, so this was because of the tariff or the Liberation Day dip, right? Okay, once there is a crossover, there is in fact this red color zone that we will enter, which is the drawdown. Okay, but once we are in the green zone, okay, and we are far from this cloud over here, right? So you can see if we are entering into the cloud zone, then there is a likelihood of a dip. But if we can easily bounce off at the lower region of this cloud zone, right, then we are still in the bullish trend over here. Okay, so now we are at this point and it's still way above the cloud. But another chart that I also want to show is our Straits Times Index. So clearly you can see it's like, clear skies ahead, where our chart for STI is way above the cloud region. But what I also wanted to share with all of you is that basically all-time high, right? And at the same time, this is an overbought situation, okay, based on the relative strength index. What it means is that basically they are all very pricey. Not the best time for value investors to go in, right? Because I think what goes up must come down. It is really overbought. So I am really looking at some form of correction in the near future, right? And I think it is coming very soon. Probably starting from the end January to the start of Feb. Because generally, based on past years' pattern, February would be somewhat of a down month for stock market or especially for S&P 500. Therefore, I think it's coming soon in terms of a correction. I do not know exactly when, but it should be happening soon. But do note that a correction is not a crash, right? Because crash or a bear market would mean that the market will crash more than 20%. So I think it's cyclical. That means for all bull runs, there must be breathers. So I mean you can see that the stock chart is not always rising in a linear fashion. There's always up and down, up and down. So volatility is expected. I think basically what I'm driving at is that this correction is just a breather. Okay, I'm not sure how long it will take. It really depends on the way how the chart is moving, like what I've drawn here for the support and resistance. So we just need to wait and see. But current thesis is that correction is impending and it's just purely cyclical. Nothing that is wrong with the current fundamentals as I've shared with you, in terms of their earnings. So if you're thinking that there is this AI bubble, maybe the bubble is small, but I still think that the current high valuations of companies are still supported with future earnings. Right? So generally, as what you can see, there's a majority of companies of more than 60% who are beating estimates. So I don't think there is a bubble for now. So what I'm looking at is really just a correction. Okay, I will now move on to the negatives, right? Just now you probably would have heard that I spoke about valuation, right? So valuation currently for sure is expensive. This chart shows the S&P 500 forward price earnings. So forward price earnings means in future, what are the potential earnings in terms of the PE ratio. So PE ratio actually represents how expensive the stock is based on their the earnings per share. Okay, so what we are seeing over here is that we are at about the 23x region, okay, which is high, right? Because in terms of average, we are looking at about 16 or 17 PEX. Okay, so there is definitely high valuations for now, but is there a bubble? I think CNBC did a survey or this analysis quite recently on January 10. Okay, what they did was to ask a group of CEOs, executives, founders, government, and also former executives on their perspective and opinions whether there is truly an AI bubble. So safe to say that looking at this chart, I think what they are telling us in terms of these surveys that most of the survey respondents, right, think that the level of concern is low, and the probability of a bubble is still within manageable expectations. Okay, so most of the survey respondents feel that there is no bubble now, right? Yeah, so I think we can safely say that I think AI there is some bubble, but in terms of the size, I think it's not big yet. So nothing to be very concerned. Because once the valuation is supported by the earnings, I don't think that is any call for concern. All right. So the second point, the big R word. Do you all know what's the R word? Is the okay, that's right. Anyone knows what the R word is? Yes, correct. Thanks, Jasmine. Recession. Okay. I think this recession word has been echoed for the past few years also. Every year we are saying that recession is coming. But I thought these are just some of the screenshots that I have looked at for 2025. These are the bigger ones on top. I mean, it's not exhaustive for sure. I think one slide is insufficient to do justice to the number of layoffs or retrenchments that were done in 2025, right? But the second bottom half would be something closer to us, right? I think yeah, Agoda, laid off 50 staff. Or the more recent ones that I can remember was 12 Cupcakes, right? They closed down like suddenly, right? And I also looked at the MOM numbers over here, right? I'm not sure if it's clear in the table, but looking at 2025, what we can see as compared to 2024, uh, there is somewhat an increase, right? But what do you think? Right, in terms of the retrenchment. So I mean, good to see as compared to last year, but maybe you all can look at 2016 or 2017, right? Or in the past years, what are the numbers looking at, right? So when we compare to other years, In fact, 2025 looks more like within the expected range or even maybe lower, right? Uh, if you look at 2020, which is the COVID year, okay, we are looking at or the second quarter and also third quarter, fourth quarter, and also moving on to 2021, which we saw a recovery. 2020 was bad, right? We are looking at 8,000 or even 9,000 kind of refreshments. Okay. So for now, I think it's somewhat controlled, but definitely the recession risk is still present, right? Clear and present. Uh, um, yeah, so I think if companies are still earning money, I think that is something that will help keep out the R word. But if things go bad and the GDP estimates are failing, then we probably need to have a relook. Okay, but just to take note, there is a difference between technical recession, which means that there's a negative GDP growth for the 2 quarters. But economic recession is not just about technical recession. Economic recession means there is a general gloom and doom atmosphere for the job markets as well as the general population. Okay, so there's a difference between technical and general economic recession. Okay, I just wanted to do some small pointers. I don't think they are big consideration factors like what I've shown for one or two. But I just want to share some miscellaneous potential triggers. Okay, there is still inflation risk if it's not being controlled, right? This will also then trigger a spark or a interest hike again, which we have experienced previously in the year 2022, 2023, where there is a huge or major drawdown of the stock markets, right? Because of the lack of access to credit. And yeah, it just becomes too expensive for companies to manage. And the tariffs, I'm not sure if you are following these news, but currently they are still in the legal process to evaluate whether this tariff implementation is legal within the constitution. Okay. So if it's deemed illegal by the Department of Justice, then there is a potential of the government to refund countries in billions of dollars. Right? Hundreds of billions we are talking about. So if that happens, which likely to be mid-year, okay, in terms of the verdict, that can also trigger a lot of sell-off, and we should expect short-term volatility for that. Okay. Last but not least, I spoke about Jerome Powell stepping down as the federal chairman. So well, if Trump brings in someone, like his favorite, then there is also the uncertainty over the new Fed chair's independence. Because, like what I mentioned, the mandate of the federal chairman or the Federal Reserve is really about maintaining the inflation and also the unemployment rate, right? So they really need to balance, really have a need to do a good balance for these 2 points. And if the Fed chair is really showing favoritism or leaning towards Trump's words, right, then that will spell trouble for the US economy as well. Okay. All right, so I will be concluding some points for my sharing today. So I think looking at the current situation or in the near term, I think the bull thesis remains, until future signals demonstrate otherwise. I personally feel that AI bubble is forming. I think it's still at the early stage, not a full-blown one, because of the strong earnings support by the companies. Okay. What is true is that many indexes are at the all-time high status. Okay, so my suggestion to everyone is to start accumulating your dry powder, which is your money. Okay, so that when the correction phase comes or arrives, we can start firing our shots. Okay, so just a caveat, correction is not not a bear market or a crash, okay, of 20% or more. A correction phase in a bull market means that the stock market is taking a breather, but it will start to run after that short correction phase. Okay, so please start accumulating your dry powder so that you can start firing. Okay, don't let cash to idle around. Think of ways for your cash to work harder. So some options would be for you all to look at would be to have your money, right? Your surplus money to be parked into money market funds or some cash management account that can help you earn 2 to 3% along the way. And these are very liquid funds. Basically, I think you can redeem these funds within a few days back into your bank deposit accounts, and then you can start using this money to start firing. Okay, so I shall stop here and just want to open to the floor if you all have any questions. Yeah, you can unmute yourself, or if you want to write it out in the chat, both are fine. Yes, I will share the slides later. Our PDF and then send it in the WhatsApp chat. Okay, no problem. Yes, okay. I think that's a good question that Jasmine. So DCA it's still very relevant. Okay. DCA refers to dollar cost averaging. This is a tried and tested and proven method lah for you all to have positive returns. For me, I agree to the principle, but I'm more of a contrarian. So I only buy during dips. And yeah, because for DCA, basically, what you do is that it is an automated investment or regular savings plan where you say that every Wednesday of the second week of this month I will put in $500 lah, in a sense, right? So that is still okay because that's like what I say, it's a proven method. But for me, my method is to buy during dips. Yeah. Okay. So your method works. I prefer my method. So yeah, you can still continue with your DCA. Yeah. Thanks. Yeah, sure. And so DCA also means dollar cost averaging. So basically when you don't want to pay attention too much, to the market, right? Basically, this is a way for you to have a regular investment plan where it is automated, and you just tell the broker to say that, hey, I want to set up this investment workflow that, every day of the month, I want to put in $500, right? So let's say you want to start January this year, right? So what you will say is that, okay, I want to set up this investment goal every 30th of every month, right? I will invest 500 into this particular fund. So you just need to set up this workflow in the brokerage app. Then they will just do that based on your instructions. So every month, on the 30th, they will deduct 500 from your account and then invest into the specific X fund or X stocks that you have instructed the broker to buy. Yep. So this is emotionless one. So basically, if you are an emotional investor, right? So a lot of investors when the stocks go up, they don't want to sell, right? But when the stocks go down, they will sell it. They will want to sell it. So DCA is a tool or a mechanism for these investors to be not don't need to experience this emotional roller coaster lah, that will impact on your earnings. Yes. So major brokerage, all they can actually set up this DCA lah, or they call it RSP lah, regular savings plan. How to buy silver? So there are different ways. You can buy the ETF, silver ETF. Okay, so sister, you need to know you want to buy physical silver or virtual silver, because virtual silver would be more liquid. You can buy the physical silver lah, but yeah, I think in terms of yes, correct, ETF, correct. So better to buy that. You just search silver, right, in your brokerage or your app, that will come up. Another way is to buy precious metals funds, right? So not targeted just silver, but precious metals in general. Those are different ways for you to buy silver. Okay. Can I just have a show of hands? Anyone has trading apps? Like, I think Anne spoke about Mumu. There's also okay. So Vanessa has, okay. Right. Yeah, I mean, if you all want, I can do an episode to share some platforms, right? And how to buy such funds as well, because there are. Oh, okay. Elaine, okay. Okay. Yeah, I can probably do one session to share some of the trading platform. I don't have every platform, of course. But I will share the platforms that I'm using and how do you navigate lah. Okay, that one. Because most I think I just want to share with you some money sources, right? Like cash, I think every trading apps can be used lah. But if you want to use CPF or SRS, then you need to find other trading platforms, right? Like Poems and Endowers, etc. Or Stashaway. Yeah, because it must be MAS certified and they have access to CPF and SRS, right? And I also will share with you all like what's the hierarchy or priority to use your cash, OA, SA, SRS into which platforms for you to plan out as well.